Well, that's got to go through a process, and we'll see what happens. Netflix is a great company, and they've done a phenomenal job. Ted is a fantastic man. I have a lot of respect for him, but it's a lot of market share. So we'll have to see what happens. And when they have Warner Brothers, that share goes up a lot. So I don't know. That's going to be for some economists to tell, and I'll be involved in that decision.
President Trump says he's going to be involved in the decision on this deal. The president raised antitrust concerns over Netflix's planned $72 billion takeover of Warner Brothers, warning that the combined market share could be a problem, too big. The deal now facing scrutiny from the DOJ and from Congress as the Justice Department prepares for a lengthy review. Prediction markets now pricing in a sharply lower chance that the acquisition closes by the end of 2026. Joining me now is Heritage Foundation Chief Economist and Unleash Prosperity Senior Fellow, EJ Antoni. EJ, great to see you. Thank you so much for being here. And I want to get your take on the macro story and all of these signs that you're looking at going into 26. But first, let me start on this deal. What do you make of what President Trump just said about the Warner Brothers deal and Netflix?
Well, Maria, I think the president is absolutely right to be very cautious here. We are talking about a relatively large market share, particularly in a market where people have been discriminated against. And we have seen a lot of biases on the part of executives, for example, that have really discriminated against some folks within this economy. It's not fair. It's not right, whether you're talking about from a moral ground or on moral grounds or from an economic perspective. In other words, these are people who were not necessarily acting in the best interest of their shareholders. They forgot that the business of business is business, and instead of delivering products and services that consumers actually wanted, they delivered things based on ideological grounds. So again, I think the president is absolutely right to be cautious here. I think this kind of merger stands in stark contrast to something like the Union Pacific Norfolk Southern merger, where in that case you're talking about railroads that have virtually no overlapping tracks. And so combining those companies doesn't actually reduce competition in any of the markets around the country. But in this case, with Warner Brothers and Netflix, I think you would see that decreased competition.
And not only that, but it's not just the DOJ, EJ. I'm looking at an analyst note this morning, and one analyst writes this: approval is needed from the DOJ, from state attorneys general, from the European Commission, and from the UK. Those regulators drove the Microsoft Activision review, and historically other countries defer to the U.S. on mergers of U.S.-based companies. So if the DOJ challenges, then the European Commission and the UK will likely challenge it as well. The UK usually wins its deal-blocking attempts, by the way. If Netflix is viewed as winning DOJ approval, mostly via political horse trading, we think the state AG challenge is realistic. So you've got the DOJ looking at this, but there could be other pushback as well. We'll be watching this. President Trump's comments last night certainly have put lots of questions around this. Several targets, this analyst writes, it would be streaming. Obviously, DOJ will examine whether consumers will face higher prices than without the merger. Can the DOJ prove that Netflix and HBO are actually competitors and not merely complements? And whether buyers of only one will get nudged to buy both. Also, they're going to look at vertical foreclosure. The DOJ is going to examine whether Netflix will reduce or withhold Warner Brothers content from rival video distributors. That's an important point as well. And number three, he writes, the effect on writers and movie makers. This issue is potential harm to content creators via greater studio bargaining leverage. In 2022, DOJ successfully blocked the Penguin Random House merger because of the likely harm to book authors. So we'll see about the case for deal approval here. It might be actually President Trump's personal involvement that gets this done or not done.
Maria, you bring up a lot of really great points there, especially with the vertical versus horizontal integration and the potential problems there. Again, whether you're talking about monopolies on that vertical or horizontal fronts. The other thing here that I think is important to remember is that you already mentioned, rightly so, those betting markets, which have been astonishingly accurate over the last couple of years, by the way. It's amazing when people have to put their money where their mouth is. They tend to be right, at least when we get them in relatively large numbers. And I
Yeah.
think all of these different headwinds that you just rightly described are evidenced by those betting market numbers that you mentioned, where the odds have plummeted that this deal is going to get done anytime soon.
Yeah, well, I'm getting this from Paul Gallant at TD Securities. And Paul Gallant also writes this. Get this. He says, we say this because DOJ antitrust chief Gail Slater is an antitrust hawk whose instinct may be to challenge the deal. We'll see. We'll watch that one. It's a very important point here that I wanted to make sure that I got out there. But I got to get your take on the macro story. And the answer to this, why are yields higher this morning when there's an 85+% chance that we're going to see the Federal Reserve lower interest rates tomorrow and Wednesday? The Fed is kicking off its two-day policy meeting tomorrow. They're divided on the size of the next rate cut. But look at the yield this morning. It's up 2 basis points, 1.9 basis points, sitting at a level of 4.1% on the 10-year. You've got real dissent here, not seen since 2019, and we'll see what Jay Powell's guidance is on how many dissenting voters show up. Your thoughts?
Well, Maria, I think people are increasingly catching on to the fact that the real story here might not be the Fed funds rate, that benchmark interest rate. We always talk about the Fed either holding steady, moving up, moving down, whatever the case may be. But in fact, we have to keep looking now at the balance sheet, what they're going to be doing with that. They ended quantitative tightening, which is the reduction of the balance sheet that allows them to extinguish money. They ended that on December 1st, and they are probably very soon, maybe just in the months ahead, going to have to restart QE, or quantitative easing. That's where they are growing the balance sheet. They are purchasing securities and thereby creating money. And the issue there is that it's going to create more inflationary pressure within the economy. And I think that's probably what you're seeing reflected in those Treasury yields. People are demanding higher yields because they want to be compensated for the risk of future inflation.
Yeah, great points all around. EJ, great to catch up. Thanks so much. We so appreciate your time. EJ Antoni joining us this morning.